Here's why I think this new monthly ETF might change everything about how I invest. Welcome back to the channel, guys. My name is Spencer. I talk about all things investing, and today we're talking about ticker OMAH, the VistaShares Target 15 Berkshire Select Income ETF. It's very new. It's a monthly payer, and we're going to go over the full breakdown of how this fund is going to work, how it's been working so far, and why I like it so much. We're also going to run the calculation for our $10,000 invested to see how much money you would get in dividends from this fund. It's very new and relatively high risk until we see the market either flip or it gets some more trading history under its belt. But I have really high hopes for this one, and the internet seems to be really enjoying it so far. So as always, if you guys are interested in dividends and investing and making passive income in the stock market, you're in the right place. Don't forget to like the video and to subscribe so you never miss an update. Now, all that being said, let's roll the intro. I've been having a hard time looking into new ETFs and talking about them on the channel because everything is just so beaten up. But at this point, if I can find anything that's not down 15%, I might have to make a video on it because everything seems to be dropping like crazy. So OMAH started trading in March, which was not a great time to start. It's down 6.4% year to date. It's a really solid fund in my opinion. And of course, we haven't had a lot of history, but I do have high hopes for it in the way that they are going to run things. VistaShares is pretty solid. I've talked about a couple of their ETFs before, and I do think there's some really good potential here. So let's check out the fact sheet and the website and see exactly why I'm so interested in this income ETF. As with all new ETFs, there is a level of risk. We haven't seen how it's going to perform yet. We don't really know, and the market has been in a really bad spot lately, so I wouldn't be surprised if this thing fell for a little while until at least the market rebounded. But let's talk about it and why this thing is so special. Well, one, it seeks high monthly income generation, which, I mean, is special, but not that special. We've seen that all the time. But what's interesting, it's going to do this by investing in a diversified equity portfolio and implementing a data-driven option investment strategy, kind of boilerplate language. Core equity exposure. It provides large to mid-cap equity exposure that can be considered a portion of the core equity allocation in a well-diversified portfolio. You guys know I'm all about diversification and understanding how that can work for your benefit in the portfolio. And then we have the typical options management by professionals, leveraged the years of experience and rigorous research process employed by the team managing VistaShares options-based income ETFs. So, the summary behind this is the Target 15 Berkshire Select Income Fund offers a core equity portfolio that generally mirrors the 20 largest holdings of Berkshire Hathaway, BRK-.B. And I wasn't really that interested in BRKB, BRKA, any of them until on the smaller channel I started looking into them, and the returns have been pretty insane. Like, I've always known Warren Buffett is absolutely a monster with investing, but I never really thought about it because I always thought he was a little more risk averse than I would like to be. But no, his stuff has been doing absolutely phenomenally well, as you can imagine. And so they're also going to provide exposure to BRKB directly while leveraging the experience of the portfolio management team to seek to generate high monthly income. I can't read today. I did a little interview call today with Ari Gutman, who is a phenomenal YouTuber and a phenomenal human being, to be honest. And so that's going to be dropping sometime next week. So if you guys are interested, we talked about some great stuff, but I did have to wake up really early for it, which wasn't bad at all. It really ended up being good, but I have a lot going on at home. I'm dog sitting, and the dog and Kimball were fighting and blah, 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 you know, all this stuff that you guys probably don't care about, but it just kept me up all night. So my ability to read is going to be the lesson today, just so you know. So if I completely misread a word, cut me a little bit of slack. But I hope you guys look forward to that interview. It's going to be absolutely amazing. It was really fun. The objective for OMAH, the Target 15 Berkshire Select Income Fund, is an actively managed exchange-traded fund, ETF, that seeks income and secondarily long-term capital appreciation, which the BRKB funds have. It's just insane. It's done super well. The fund strategy involves two components: investing in a portfolio of equity securities based on the selective VistaShares Berkshire Select Index and generating income through an options portfolio, primarily through the fund option strategies. The fund seeks to achieve an annual income target of 15% distributed monthly. Now, we've seen some pretty insane funds and some pretty insane promises. We have XPay and SPYT promising 20%, which is very, very good. It's hard to do, I will say. All of this is hard to do to an extent, but 20% is not necessarily something as realistic. In my opinion, 15% is a lot more doable. Only time will tell how these actually perform, but I wouldn't be surprised if the 20% ones end up doing more around 10 to 15, and maybe OMAH can do 15. We will see. But it's a really, really interesting idea because I really like the Berkshire company. I mean, it's huge. It's well tested. We do have a downside. The expense ratio for OMAH is 0.95%. which is a lot. That is a lot. We're going to factor that in with our $10,000 invested calculation, and we're going to use just the flat 15% rate for the dividend and imagine that it doesn't trade up or down. But I want to show you guys one really important thing. One, the distribution calendar is all up. Performance history is minimal. It's only been trading for, what, a month? A little over a month. Let's go over the top 10 holdings. Berkshire Hathaway Inc., pretty obvious, 10.41%. Very, very solid. And again, you will get some price appreciation with this strategy, similar to what we've seen with a lot of the other income ETFs. Apple, American Express, Kroger, VeriSign, DaVita, Bank of America, Coca-Cola, Visa, Citigroup. So a lot of banks, credit cards, a lot of financial stuff. And then we have Kroger, which is kind of funny. Some of these others I'm not super familiar with. But all in all, the weightings are pretty, pretty spread out, which I like to see, and the main one being Berkshire Hathaway and then Apple, which we can get. Apple's super undervalued in my opinion right now. I don't know if it's the news with the new iPhone. I don't know if it's just sentiment. It probably has a lot to do with tariffs as well on the the imported goods. But maybe Apple is one I would buy. I've never owned it, which is kind of funny. I'm not like proud to say I've never owned Apple. It just never was that appetizing to me, and so maybe I'll have to. Maybe I'll have to do that just to say I've owned it for at least a period of time. But all in all, I mean, the website's really cool. They did a good job with this. They do have the fact sheet and everything up, but it's not really kicking out any valuable data because it hasn't been around for that long. So we took a look at the fund. We saw the goal, what it's trying to do. Let's see what our calculation shows us to see if OMAH could be the replacement ETF that we've all been looking for some high returns and solid growth. Dividend calculators pulled up with OMAH already plugged in. Do I like OMAH or OMAH? OMAH sounds like something I'd call my grandma. We can see monthly distributions. DRIP is on. Our number of shares with 10K invested is 537.63. We're not adding anything annually, and we're not doing taxes because I invest primarily in my Roth IRA, which I just maxed out and I'm super happy about a couple weeks ago because that was the deadline, was a couple days ago. But our initial annual dividend yield, I'm doing 14% to counteract that 0.95 expense ratio to give us a really realistic outlook on how this will perform. We can also see I'm not increasing the dividend. It's supposed to be flat at 15, in our case 14, and the share price, I'm kind of counting it as if it went zeros, right? Because the goal isn't price appreciation. We will have that because in my opinion, the stocks in this fund are going to go up, but I'm not going to factor that in because I can't really tell what's going to happen, especially in a market just like this one. So I may even test the waters and buy into this one relatively soon. Let me know if you guys want me to do that. I always like testing the new ETFs. So far, it's cost me quite a bit of money, but hey, it's content. We like watching it. Please tell me you guys like watching it because if I'm losing money and people don't even enjoy the content, that's going to be a big bummer for me. So 1 year invested, we can see our first return is pretty solid. It's a 15% return because again, we're dripping monthly, and that's why this is above 14%. If we're going to do annually distribution frequency, it would be flat at 14. So you're getting $1,400 in dividends every single year from your 10K invested, and that's very, very solid. If you didn't have drip on, or if you just pulled the money out after every year, you would be getting a good amount of money. I mean, no complaints there. It's really going to spiral quite quickly because of the compounding factor, but it's a lot more realistic of an outlook than like XPay and SPYT, in my opinion. We can see in 5 years, your 10K would double. So every 5 years doubling, typically it takes 7 to 8 years to double a position, not even a position, but just your initial investment in the stock market. So pretty solid. You're doing it in 5. We're cutting off a couple of years, and your ending balance is $20,000. I'm trying to talk slower. I've been told many times that I talk very quickly. I have an older sister who is, she talks so fast. And so I'm like, wow, maybe it's our whole family, but I'm trying to slow down so things are a little bit clearer. I know we have some viewers from different countries, which boggles my mind, by the way. And thank you for watching. It's so cool. So cool to think that there are people from other countries watching my content. So if you guys would do me a favor, if you're from a country outside of the US, let me know in the comments. I'd love to know where people are watching from. I can see it on my analytics, but it's cool getting to interact with you guys from, you know, the UK, or some have been from Brazil or South Africa. It's amazing. Anyways, so you would end up, after your first 5 years, the dividends all paid out would be $9,437, which is really solid. And again, 100%, 100.56% return in just 5 years. If we kick it up to 10 years, you're up to $40,000. You've now absolutely 4x'd your money, which is crazy already. But your dividends paid out $28,364. Your 10K is worth $40,000 at this point. And this is why I love investing in these ETFs, because in 10 years, $40,000 now paying forward is going to pay you $6,000 a year. You can almost max out your Roth IRA every year just from a 10K investment you made 10 years ago. And that is hard to do. But of course, the Roth IRA maxes do go up every single year. So it is something to note. We're going to double it again, and we're going to do 20 years invested. Now, I will get comments saying, oh, it's not going to do this. We have no idea how it's going to perform. And that is very true. It's very valid. We have no idea. We have very little history for this fund. It was launched in a tough market, and who knows how this next couple of years to decades in the stock market is going to be. But this is just an example to show you if a fund can manage to return 14% every single year and you compound that monthly, the returns can be absolutely astronomical. It can be insane. I got another comment saying I say insane too much, and I probably do. But these returns, like crazy. Crazy is just a synonym to insane. Anyways, moving on before I think of other synonyms. 20 years, 162,000, just under. Your 10K has gone up 1,500% with the power of compounding. Total dividend payments over the 20-year period, $142,000. I mean, I know you're probably not going to want to buy a house in your maybe late 40s. Maybe you do, but you could literally pull this money out. You've invested it at a simple rate. It's getting 14% compounding every year. And now you have nearly $150K to put as a down payment on a house to spend on a nice vacation. Or you can do what I would do personally. If I wasn't ready to retire, I'm taking our now annual dividend income of $24,000 and reinvesting it. And guys, I do want to make a really important note. Generational wealth, it has its good and bad, right? I would love to hand down some generational wealth to my family. And if you get to a certain size in the stock market where your returns can be, look at this guy, clout chaser again, wants to be on video all the time. Anyways, if you get to a certain point where you have enough money to just consistently pay for your lifestyle and keep growing, I mean, you've made it, right? If your family handles that money well for the next multiple decades, centuries even, you should be fine. And so that is my goal. I won't be alive in a couple centuries, maybe. I don't know. I'm relatively healthy. I do drink Mountain Dew every once in a while, but because of that fact, I would just like to be able to make generational wealth. That is my goal in my lifetime. My grandpa did it. He was absolutely insane. He just had so many kids that it ended up kind of diluting it. No offense to my entire family, but I do want a lot of kids as well. So I guess I'm going to have to work pretty hard for that. But it is a goal. So that's how you can get there, though. And the thing is we don't have a lot of opportunities to do that this day and age. I'll say it. It's tough. Times are tough. Markets are tough. Money is tough. But there are ways that it can be done, even if it is just some young kid telling you about it on YouTube. 30 years. Same analogy I always like to use. Let's say you're 25, you want to retire at 55, so you invest all of this money and you just see what it does. You invest 10K into OMAH. It trades sideways, but it consistently yields 14% in dividends, and you compound that at a monthly rate. How much money are you left with? The answer, $651,500. And I know what you're thinking. That's not a lot of money. Maybe you're thinking that. Maybe you're not. That is an insane amount of money. It really is. You have to think about this from a retirement perspective. If you knew that you could retire with $650,000 in the bank from just a 10K investment, I mean, I'd be pumped about that. When we think about investing and retiring with millions and millions, people don't often think about the hundreds of thousands you'll have to invest over time to do that. And that is why these are really cool, these calculations, and they show us, I mean, you could invest 10K into 10 different funds like this, and then you'd have millions and millions. So it's all relative to what we're doing, what our calculation is, and our initial investment is relatively low. But again, you're gonna have to counter this with inflation, of course. And if you pull out of your Roth early, it would be taxed at what, 15%, which is tough. It's hard to pay that. It is tough. So ending balance again, 10K has become $651,541. Total dividend payments over the 30-year period, $601,399. And my personal favorite, our annual dividend income moving forward is $97,000. Now, I know what you're thinking. $97,000, that's not enough to live off of. In 30 years, that will probably be minimum wage. And I'm not going to argue with you. It's crazy to think that it might be minimum wage. But at least you're getting minimum wage. Think of the people that are not investing. And that's why I talked about it with Ari a bunch today. Like, my goal with the channel, and it really centered me back on what I've been thinking about this with this channel from the beginning, is to have people understanding investing, enjoying it, making a community where we can all discuss it together, but primarily getting people to think about their future, their retirements, and their money, all in all. So I was pumped about it. It's a great episode. I think it's going to be super fun to watch. I'm going to try not to watch it myself because I get nervous at what I said. And I am nervous. I don't know. It's different. I'm going to be on someone else's channel. It's not my safe space that we've created with all of us, but I'm really, really pumped. And it was a great opportunity. So a huge shout out to Ari. I'll put the link in a video on Monday if it comes out on Monday, or whenever it comes out the following week. So I hope you guys watch that and let me know if you're going to, or if you find it enjoyable when you do, if you do watch it. All in all, though, OMAH, really solid. Definitely something I'm looking into, especially with that nice 15% yield. I hope you guys enjoyed this video. It has just been a wild couple of weeks, but it has been very, very fun. And I do want to take a moment and shout you guys out. You guys are a huge blessing in my life. Everyone that comments, that helps me build the channel, that gives me ideas, gives me tickers to look at, nice comments, people that like the videos. Honestly, thank you guys so much. I can't even believe it. We're well above 10,000 now, 10,600, and my goal is to just keep going. I'll need you guys' help to do it, and if I never grow another subscriber, if I have you guys, I'm more than happy. And that is the craziest thing. It really is. I'm so excited, and I'm really appreciative of all of the things that you guys have done for the channel and the support I've been given. I never thought I'd get this much support, but okay, enough. I know you're probably thinking, get this guy off. What's he crying about? I'm not crying. I'll probably cry later, but we'll see. But all in all, OMAH, a solid fund, definitely one I'll be looking into, and I want to know your guys' opinions down below. Let me know what you think, and I hope you guys enjoyed this video. If you did find it enjoyable and you learned something, don't forget to like and subscribe, and enjoy these videos that are popping up on your screen right now, specifically the weekly dividend ETF account breakdown, because it was a crazy week in the market, and those ETFs took a beating, but some are coming out on top. Thank you guys so much for watching. I hope to see you in the next video.